Hello, good morning, everyone. Today, I'm here to talk about the global financial market and how the various factors that can influence them. We will look forward at the current trends in the world economy and discuss the drivers of economic growth and analyze the impact of geopolitical developments and government policies on the global financial markets. In addition, we will also consider how these factors can affect the performance of the business and investors in the USA, Germany, and China specifically. The global financial markets are incredibly complex, and understanding the nuances of these markets is essential for any business or investor. I hope to give you a better understanding of the current dynamics and provide you with the insights and information you need to make, to make the informed decisions. Thank you, and now just let's get started. So here's a table of content, like the different investment products, average return, and risk on investing on these products of USA, Germany, and China specifically. The categories and types of mutual funds operating in US, Germany, China, the risk management practices, and different roles of risk, chief risk officer, and board of trust directors, and other trust members. The pension fund companies in USA, Germany, and investment products, the average rate of return, and the risk involved in and challenges faced, basically. The main key factors are the fifth, sixth, and seventh part, which is investment and their annual return in the United States of America, Germany, and China, respectively. And I've ended the assignment with references and conclusion. Now, moving to the first part, the companies in USA and China and Germany, we have to find out the different investment products. So in USA, there is private equity and hedge funds. Now, what are hedge funds? Hedge funds are basically the alternative investments that are typically set up as a private limited partnership and actively managed. Basically, they are actively, managed by an investment manager. Uh, and hence, the hedge funds are, subjected to less regulation than mutual funds and have a fewer restrictions on their investment part, making them more attractive to some investors. However, these hedge funds also come with higher rate and higher risk, basically, and higher cost, and investors should understand the risk associated with this particular hedge fund before investing. And additionally, I would like to say that may or may not be these hedge funds are maybe or may not be equal, like liquid. And moving to the next part, the average return in the last 1 year. Money market funds got 0.05% of return, which is pretty okay, I would like to say. The private equity funds and the investment trust, however, got 10 to 15 and 8 to 10% respectively, which is a great margin to consider. The risk involves the political unrest of divisiveness, which is basically the change in government policies, debt levels, and all those monetary and political factors. And there's a possibility of inflation due to monetary policies also. Uh, Coming to China, the investment products, the bond includes the first bond funds, equity funds, real estate funds, and alternative investments as private equity and venture capital. Now, what is venture capital? Basically, it is a form of financing that provides capital to companies with high growth potential in exchange for the equity stake. Now, the average rate of return for last year in China, as you know, the equity funds got 15 to 20% returns, the real estate fund got 8 to 10% return, but venture capital got the most, which is 15 to 20% of the return, which is a huge margin to be considered. Coming to the risk part, there was a decline in the economic growth rate, strained trade relation with the other nations because China is, the heart of manufacturing, products like the phone we use, the laptop we are using to record the session, and yeah, these all come from China. We all know that. And there was also a central government's control over the foreign currency exchange. Like there was uh, trade union something going sort of in the Chinese government. And coming to the Germany, the investment products include the bond funds, real estate funds, infrastructure funds, and same as China. The average rate in the last 1 year of the bond funds, real estate funds were 3 to 5 to 8 to 10% respectively. However, the venture capital showed the most, which is 15 to 20%, which is absolutely good. The risk includes the slowdown in Eurozone's economy and the dependence on export and the risk of reduced global demand. Now, these factors are very crucial to consider because Germany is a plays a key role in Europe's economy and growth of the European GDP. So that factor can be considered because of as a risk factor. And there were other factors like aging of population and all those sorts. Now, moving to the next slide, we have the categories and types of mutual funds in USA, Germany, and China. In USA, the mutual funds are typically categorized based on investment strategy and the assets they hold. Same goes for the Germany and China. The equity funds, bond funds, balance funds, and specialty funds. Same goes with Germany. There are equity, bond, balance, and specialty funds. Now in China, there are index funds as well as QDII funds. QDII funds are based on foreign securities and forex reserves, and index funds are basically these funds replicate the performance of a specific index. Like if like in India we see Nifty 50 or the Sensex, which plays a key role in the stock market bonds. Similarly, index funds in China. Hmm. So moving to the next one for the mutual funds operating in USA, Germany, China. We have to find out the risk management practices followed by mutual fund industry and like first part we see the under the control of SEBI how they regulate the mutual fund industry in India as compared to how does it impact the government of China, Germany and US. There is diversification, valuation, disclosure of mutual funds, portfolio holdings, and other stuffs. There is credit risk management, the CIBIL scores and all those stuffs come, and the individual securities of those stock and bonds. Liquidity management, the mutual funds have proper liquidity management in process to place ensure like to meet the norms and regulation and redemption to safeguard the investments basically. In the functions and roles of responsibilities, like the chief risk officer, as we know, plays a crucial role in ensuring the stability and security of an organization and the shares with the companies hold. And yeah, so that's the thing. And the effectiveness of risk management activities also, it plays a key role. Coming to the second part, which is risk management committee and like risk management committee management, board of AMC and board of trustees. The risk management review policies, procedures, monitors effectiveness, and provides recommendation. The board of AMC provides oversight, approves strategy policies, and monitors risk management. The board of trustees provide overall oversights and provides risk management strategy, ensures compliance with, and monitors and safeguards all the stocks and bonds. Now, coming to the pension fund companies in US and China, how they play a key role in investment products, returns, and the challenges faced. In investment products, the USA had those stock and bonds like fixed income securities, real estate investment trades, commodities like precious metals, energy, agricultural, and other stuff. In Germany, we have real estate, infrastructural development, and fixed income alternatives. In China, we have stock and bonds, both domestic and international, like foreign direct investments and all those stuff. And there are commodities and foreign exchange investment. The returns generated in last couple of years is included in the graph, which I will show in the next slide. And next we go to the investment challenges faced by the pension fund and in these countries basically. Like they provide a limelight, like how the in US, Germany, and China facing their own difficulties and problems and obstacles. Basically, they act as they create a barrier among the investors and as well as the government. In US, there is low interest rate and regulations which posing challenges to the industry. So there's a fluctuation in the stocks and the volatility is very high. Germany's pension fund industry is based on like twin challenges, aging population and need to ensure adequate funding. Like in we can see or we can illustrate through this that maximum of the German people invest in FDs rather than those mutual funds and other stock and bonds. In China's pension fund, we can see that's a unique obstacle like lack of investment expertise. Like people don't have the proper guidance, they are not properly guided like where to invest and how to invest so that they can generate more revenue, like or rate of return from that. Moving to the next slide, we have the returns generated in the last couple of years, as I've told you. The highest assumed return for all those years, like the 5 years, 2015 to 19, is median rate of return was 8.25, the average was 8.3. For the lowest one, it's 5.25, then the average was 5.35. The actual one for the median, actual one is the median is 7.4 and the average is 7.38. Now, moving to the USA part of the annual rate of investment, annual return on investment. Uh, by the graph, we can see it has the rate of return the highest, considering from 31.21% in S&P, which includes dividends as well. It got 15.33% in BAA corporate fund and 19.08 in gold. So US government has invested out and got the maximum return in S&P 500, followed by gold and then by BAA corporate. Others include the treasury bill bonds and 3 month treasury bill, etc. Now, compared to 2018, USA saw a major growth in the uh, investments like they have occurred. Like in 2018 in S&P 500, they bear a loss of minus 4.23%, and in the next year it got a huge jump of 31.21%. In considering in gold, it got a loss of 0.93%, and in 2019 it got 19.08%. In real estate, it got 4.53%, and it generated 2019, it generated 3.69%, which is a bit low. Moving to Germany's part, the German government has taken an interest in ICT and computer technology and software development and greenfield projects. Now, the greenfield project is a type of venture which is business starts business starts a project from the very scratch, or we can say it's like basically entrepreneurship. This usually involves starting in a new market or creating a new product or service. It is a bit, it tends to take more time and the resources as they like required a lot of planning, research, and basically in the research and development part there is huge investment. The data, like we can see, also shows a considerable increase in the number of, international project finance deals like FDIs and ODIs, which is outward forward direct investment, similar to foreign direct investment. And yeah, so in conclusion, the German government continued efforts to support the growth and development of various industries, but majorly it got the development of ICT and software and got a huge return of 150%, which is absolutely great, I would like to say. And according to the given information in investment companies, bank, private healthcare, and insurance, government made a pretty decent impact on the investment side, and the rate of returns were actually pretty good. Moving to China's part, like according to 2019, the year actually the China's data was a bit encrypted. I couldn't find the 2018 data, but I somehow managed to got the GDP of the data, which is 141 billion in 2018. But compared to 2020, we can say the in FDI flows were pretty okay, but it got basically increased in 2020. And 2019, the growth was pretty okayish, I would like to say. Like in FDI inflows, the total M&A values over ODI, ODI as I told you, foreign direct, outward foreign direct investment, which can be contrasted with FDI. Basically, the funding is in the opposite direction. That's all. And the China's main core of investment was in Asian or the Asian countries. Like ODI was amounted to $117.1 billion, and non-financial ODIs were accounted to $110.6 billion. That's the figure. Now, in the references and conclusion part, as I've said, the USA I've got from the New York University, the Stern part, and the Germany I've got from the Bundesbank, and China's I've got from the Morgan Stanley. The data were mostly encrypted and hidden. And in conclusion, I would like to say that US, Germany, Chinese, and the financial markets, like it was a combination of stability and volatility, like usual. The market were very, the global financial markets were very heavily, you know, disrupted or interrupted by several political factors, geopolitical factors, factors. Like, in example, I would like to recently say that the Russian-Ukraine war had an impact on almost the whole world's market. Every stock crashed down, all the stuff's happened. So yeah, in different countries like US, there was a downturn growth and trade disputes. In Germany, there was aging thing, that aging population, and in China, we like to say there was lack of expertise in investment. Like people they didn't have the knowledge to where to invest and where to get the highest rate of return. So thank you guys. Hope you like my presentation as it was created with me and one of my team member. And as a part of this assignment, I've learned a lot about the global financial market and how its impact with several other factors, and like it could be anything, climatic factors, geopolitical factors, policy changes. And yeah, so the global financial markets is completely unpredictable, and it could be like anything, like factors which can even influence or affect them. So yeah, it was a great honor and privilege to have to be the part of this assignment, and I've learned quite a lot of few things regarding the financial market. So yeah, thank you.